We're good. Go ahead, sir.
It is now 5:32. This is regular meeting boards. Meeting of Taylor ISD, January 10th, 2022. We have 4 members present. Sister Amber leads the pledge, and yours truly leads in prayer.
I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Most gracious, eternal, everlasting God, is going to begin to come in the land, Father, that you are God and God alone. And that's what we come saying. Thank you, God, for this another day that you've allowed us, Father, that you've brought us through, Father. And thank you, God, for the opportunity to serve our children, Father, our community, and our schools, oh Lord God. And we just pray, God, we go through this meeting this evening, Father, that all things be done decently, Lord. Pray, God, that you continue to lead us, guide us, and direct us in all that we say and do. We ask all these blessings, God, in Christ Jesus' name. Pray, and ask it all. Amen.
Amen.
Should we get anyone signed up?
Yes.
No? Okay. Not with a motion to approve the consent items. We approve the consent items as presented in this regular board meeting, December 13th, 2021, of the board goals update for January 2022.
Mr. President, I so move.
Have a motion by Mr. Williams,
A second.
second by Ms. Amy. All in favor? All opposed? None motion carried.
All right, this is the best part. We get to honor our A+ employees. So Ms. Missy, will you please stand up? We have a bag for you. So I'm gonna present this bag and kind of give a little background on Ms. Missy here. When I got here, you were the lock lady, I believe then, weren't you?
Yes, sir.
And then recently, she was the one that started visiting with us about, hey, it might be time to replace the locks. So when she came back, that was, most people would go, hey, you came back and you're gonna cost us a whole lot of money. But definitely when I was visiting with her, I could tell, yeah, it's frustrating her, but she never showed frustration. And that's what I admire about her, because she didn't do that. Also, she drives a bus. And as well as we know, bus drivers right now are hard to come by.
Yeah.
And so she jumped on that. And I'll say something else. Anytime you need something done, you pick up the phone and call her, she's there and everything. So she's working on installing our new locking systems all across the district, and that's a full-time chore. Her job will be, I think you told me your job will be easier in, what, about a year or so?
By the beginning of school year next year.
So, but I think this really hones in on who Miss Missy is. And basically, as I said, she drives a bus. And, I tell people all the time, the hardest job in this district is driving a bus. The most important job is driving a bus, because you're the first one that the child sees and you're the last one that the child sees. So pay attention to your bus drivers, teachers, principals. I talk to them that all the time. You want to know what's going on at the houses? Ask your bus driver, because they drop them off. And so I guess it was one particular morning, you had a little girl and a sister get into a little situation, and the little sister did not have socks on this cold morning. And so I believe you took it upon yourself to make sure that her feet were warm. So we provided socks to her, and that was very nice of you to loan your socks to the little girl. Then you went to the store across the street, got a bunch of little socks, and took them back. And I don't know if you let her keep your socks. But again, that's what I'm talking about by when we're looking at A+ employees and people that not just do their job, but people that are going above and beyond. And that right there says a lot, because that's an employee. She could have easily ignored the kid crying or griping and not having socks and shoes, or not having socks on a cold morning, but she took it upon herself to make sure that kid had some socks. And so, again, we want to commend you, and that's exactly what type of employee we're looking for. So thank you. And I believe, who's going to take a picture? You have some guests here with you, I believe. You want to introduce them?
my husband Jim,
Jim's here,
and then
okay.
I have Justin, he's in the back, and John. Oh, and.
Come on up here, you get in the
And
picture.
these are my babies that I've adopted.
All
I
right.
love this. You need to come with her.
No.
Are you sure?
You want in there, Dr. Richard?
No, you get
might
the,
want to sit down. All right.
hide back here.
Get one from both ways here. All right, gotcha.
Thank y'all very much.
Thank you. Exactly. Thank
Y'all are free
But
to go.
little family.
Hey, y'all have to stay. I know they're hungry.
Thank you.
I'm gonna-
All right, now y'all's recognition. Let me find my cheat sheet here. All right, so you got some goodies right now. Y'all saw your goodies. You got your trailer hitch,
Love that.
goes in the back.
Mhm.
Got a little book from the is that primary school, Miss Sloan?
Yes, sir.
I'm not even gonna butcher this word. What's this word?
Charcuterie board?
Charcuterie board, that middle school has made for y'all.
So cool.
And then primary also has the balloon down under, that y'all have underneath. And then also, since the theme is rising above, there's a balloon inside the sack from elementary that you can put someone's name on, that you can light that one too as well. More personal.
Like a paper land?
Yes,
Oh.
and so it kind of goes with the rising above.
I think we need to do one for Sea Larry.
I do
Just
too.
for Sea
We,
Larry.
we all have his and Matt's and Stephen's. I just didn't put it out here because we were all kind of piled in here and I'm trying to keep our social distance. Thank you.
Yeah, that's awesome.
And again, just, I know we always talk about how long we're on the board and all that, but, you know, I will start with, Mr. Adams over here. I believe it's 30 years this year.
Is it really? That's awesome.
Next down the list is Norman Williams. I believe that's 21 for him. Karen, that would be 20, right behind him. And then Kip, that would be 12 years for you,
Well,
12 whole years. And then next would be Matthew Crawford. He's got 9. And then Mr. Skinner has 8.
wow.
So we have a very veteran board, as you can tell, very tenured board. So, lots of experience on this board. And then also, we don't want to forget, Mr. C. Larry Smith has had 16 years also on the board that he served, and everything. So again, thank y'all for putting up with me. Thank you for putting up with the district and Mr. Milam, and all that. Miss Sloan, I'll work, have to help her with the computer thing, yes. But again, thank y'all, really, seriously, for your service. The next item is each year we have to have a taper report. As you know, you've had this report. You were presented the data back in August, but the law requires us to have an update in January or 90 days after receiving the taper. We are a Superior Met Standard district. We are accredited. There's no special education compliance issues. We meet the requirements. In our scores, basically, you've seen this graph. This is what taper is. If you click on you don't have the links, but if you were to click on these links, it would take you to something similar to this that each of y'all will recall we went back over in August. And it just basically shows, for example, Algebra 1, what the Texas score was, the Region 7 scores, then to how we compare with them. And we've gone over all that back in August, but we're provided to give this to you every January. So, in saying that, any questions on the taper report whatsoever? Okay. Next, we have Ms. Jonna McNeil. She is going to be presenting our year-end audit. I don't know, I probably stole your thunder.
No, not at all. I'm sorry.
So, you're up.
Well, no,
Ms. McNeil, you sit
I
wherever
thought, Mr. Adams was joking about how long it took him to break in his chair.
you don't lie.
Now I understand why you, asking them to change their seat was, such a big deal.
Absolutely.
Okay, so, as he said, my name is Jonna McNeil, and I'm with Mallory McNeil and Company in Paris, and we just completed your, audit for August 31. And, I was going to come visit with you guys a year ago, and I was on my way here, and the snow just kept falling and falling and falling, and I thought, I really just eat and breathe school district board meetings, but I'm just gonna have to pass on this.
Yep.
And that was the first meeting I have ever missed, and I was like, the risk and the reward here were just, and I think you guys were supposed to meet the next morning at like.
8:30.
Yeah.
And we did.
You did.
I made them all come.
Yes.
They were texting going, hey, we really having this? Yes.
Yeah, and then it was like, the world shut down for us for a little while after that. But, so it's nice to be here with you today and to get to meet all of you. And the audit that we did for 2020, that was our first year to audit you. And then it was also, COVID kind of things were going on, and it was very remote. Bree came, one of our auditors came just maybe for a day, but everything was really pretty much done electronic. We really like to be on site. We like to get to know our districts and the people, and you learn so much more about them and what goes on. We're here. And so this year we did come, and we were here for a couple of days, and we brought, 4 or 5 people, and we just held up there in the room on the other end of the hall. And it was very good. I think that it's the way audits are really designed to be, so that you can interact with the various staff and kind of see what's going on. And that helps you to learn about internal controls, and gave us an opportunity to, visit over at the food service office, and then to visit with the people inside the office here. And over the last couple of years, you guys have had some material weaknesses in your internal controls, and I want to let you know that those are coming around, and we're riding the ship on that. This year, we still had some little snags of some things, so you've got what we call some deficiencies, but not material weaknesses. And so those kind of terms get really technical from the standpoint of it's just how soon you could find an error if you had one, and how complete your financial information is. But I really think that you're definitely headed in the right direction, and I think you're getting a good handle on all the different pieces and how they fit together, and the adjustments are less than what they, and that's what you hope for, is that every year that your adjustments become less and less, and that I tell people that it takes about 5 years for a business manager to really stop just ducking when the ball comes to him, and is really in the position to catch it and then throw it back. And so that develops over time. And also, there is not any other accounting to me that is as difficult as governmental accounting is now. It's just, and the GASB still can't decide how they want us to present the financials. And so, to me, it's a little bit like learning math and algebra. We start out, it's 2 + 2, and we get that. And then before long, we have to eventually progress into calculus, and that's a lot more difficult. And it doesn't happen overnight as you develop your ability to understand the finances and accrual accounting and governmental accounting in general, and all the different rules that are associated with that. So I just want to encourage you that I do think that we're headed in the right direction, and I see just so much growth happening within the just overall understanding of the accounting. And I love the fact that Brandon will ask me questions, and that's what I want. I want for my clients to feel like that if there's something that they don't know, ask me, let's talk about it, let's learn it, let's go through it. Because that's how we all grow, is by learning. And you want to be able to collaborate with people and for us all to meet our objectives. And so with regards to your report, the only thing that we have in it this year related to the deficiencies is the campus activity funds. We have to get those inside the general ledger and get them monitored and get them recorded. That's a new GASB standard. And so I think you're putting them all into a Ascender now, right? And so they've been kind of out there on their own and in different softwares. And so that's all going to come in-house now. So that's definitely headed in the right direction. There's the notes to the financial statements that are in here. Those are all very similar to what you've seen before, so there's not really anything super exciting in there. As far as budgeting this year, you guys did a good job on your budget. You went over slightly in one function code, and that was because of some adjusting entries that we had to make. And but not anything major. And so that's really good for a district your size, that your budget came out as well as it did. I would like to look at your fund balance with you just a little bit. So if you could turn to page 14. So this is your exhibit C1, and in the first column for your general fund, you'll see that your total fund balance was 8.5 million. And you can see there how it breaks down. You have 6 million in committed for construction. You've got $1 million for committed for other types of fund balance issues. I think that was COVID addressing that kind of thing. So you have 7 million of your fund balance that you have committed, and you've got 1.5 million that you have that's unassigned. And then your debt service has some fund balance in it, but you guys are working towards, with your fund balance, of mitigating kind of that swing for your taxes, and so that's normal. And then your other governmental funds, those are your special revenue funds, and they're not really designed to have significant fund balances in those. And so that's what's in that fund. And then if you look on page 16, this will show you your activity for the year of that same set of funds. So your general fund, your debt service fund, and your other governmental funds. And so if you look down at the very bottom of this page, you'll see that your fund balance at the beginning of the year was 10.1 million, and it ended the year at 8.5. And so you can see there kind of what your expenses were, but like I said, you budgeted for that to be the case. And you did some capital outlay and some facilities maintenance. And so that's, what's brought about that you spent a little bit of your fund balance there. And then you'll see in your debt service fund, you had 1.1 million in fund balance. You ended with 887. And in that one, you guys also did some refunding of some debt and paid down some debt with some fund balance that you had. So that was kind of what was going on in that particular fund. And that's what makes that bottom section look a little bit different with the refunding of bonds and premium on the issuance. That all had to do with your refunding. And in the notes to the financial statements, there's some information in there about that if you just want to visit that at some point, just talking about the economic impact of that and the benefit that you received from it. Any questions about your financials on your general fund or your debt service fund?
Did this show that the total deficit on our property taxes was like 723,000?
Deficit on your.
On, page 14.
No, it won't show a deficit of that, but let me show you where if you look on page 55 and 56. This is your property tax schedule for the last 10 years. So it'll show you what the receivable is and the amount of the levy for each of the property value for each year, the amount of tax you have remaining to collect on that year, the current year's levy, and then the collections for this year. So you can see that as of the end of the year, you had 802,000 out in uncollected taxes, but that's from several years coming forward. So your collections for the current year are good, with regard to the percentage of what you're collecting out of what you levied.
Well, what was this year's? Is that? No, I
You
see the
collect-
10,000.
This year, your total levy was 10 million, and you collected 8 million in maintenance and operation, and then you had 2 million in debt service. And then you have adjustments for the year that have to do with just the amount of the levy, and then, people that are over 65 and things like that. And so then the balance that was uncollected at the end of the year for this last year's levy was 155,000. And, normally the trend is we have quite a bit for that most recent year, and then that next year you collect a little bit, but then after you go a couple of years, it's stagnant, the collections after that for a while. You usually take some action, or people selling their property or something like that. If someone doesn't pay their taxes within 2 or 3 years, they probably don't for a while.
Mhm.
But this particular schedule here is one that's in your report every year. So if you want to look at detail back from 2012 past that, you can just pull out the reports from previous years. Governmental accounting is really interesting from that respect too, because in our fund, our general fund and our debt service fund, that receivable that's on the books, that $800,000, we don't count that into our fund balance. We defer anything that we basically haven't collected, because if you don't collect it within 60 days of your year end, then it doesn't impact your fund balance to do it. And that's a good thing, because that $800,000, the amount of that you might actually get to use in the next year that people actually pay is really a minor amount. And so from the fund financials, your general fund and your debt service fund, it accounts for them much more on a cash basis, what you recognize into your revenues. Now, when we look at the financials that you see on page 12 and 13, it's a little bit different. These are full accrual financial statements. And the reason I say that governmental accounting is so complicated is, the idea of keeping 2 sets of books has not ever been a real nice idea. People usually, if they say you keep 2 sets of books, that means that you're probably up to something, But only in governmentals do they require us to keep 2 sets of books, basically, and put it in the same report. And so, when you're looking at this page, the A1 and the statement of net position, and its sister statement, the B1, that's the statement of activities, that's basically a balance sheet and an income statement that is on the full accrual method. And when you look at the page 14 and page 16, that's your district's balance sheet and income statement on the modified accrual method. So we take that modified accrual method, which is how you guys budget, and we add and subtract to it to come up with the full accrual. And we're required to present both of those methods inside your financials. Now, I don't spend a lot of time with the A1 and the B1 because we don't really use those. But I want to bring your attention to the difference so that if previous auditors haven't talked to you about that, you'd be like, okay, well, that makes sense, what was going on in the report. So if you look at page 14, and you look at this number right here that says 9.6 million, that's your fund balance. And if you flip over to page 15, you're gonna find that number at the very top of that page, that 9.6, and it's gonna say that that's the fund balance from your governmental funds. Okay? If you look at your page 12, that is your A1, you're gonna see a total net position of $28 million. And if you go back to that page 15, you're gonna find that $28 million is gonna be the last line on that page. So what happens is that when you're looking at just the fund financial statement on page 14, and you look at your assets, and if you compare those to the assets that are on page 12, you'll see that your facilities are not on page 14. That financial statement does not include your buildings, your infrastructure, any roads that you have, your equipment, your buses. It's not presented there because it's a very much kind of a cash basis financials, and we just expense those items when we purchase them. Okay? But if you look on page A1, it's page 12, you'll see that you have, $45 million in land, buildings, furniture, construction in progress. You see that? Okay. The other thing that if you look on your C1 and you look at your liabilities, all of those liabilities on that page 14, those are things that you're going to pay really quick. They're going to be due in the next year or so. They're not long-term liabilities. They're very short-term debt that you have. But if you look on that page 12, you're going to see all your debt that you have. And so the reconciliations that are in here help to get you from fund balance to net position. And several years ago, the GASB made us start presenting this net position financial statement on the full accrual method because we had business people that were in the meetings and stuff, and people making decisions about districts and governmentals, and they thought bonds and that kind of thing, and they're like, your financials don't have your assets and they don't have your debt on the books. We want to see the assets and the debt on the books. And no one could come up with a really good solution to still let you guys budget on a basis of, I got to pay this bill this year, and I've got this much dollars coming in to pay these bills this year. And when we look at an asset, we think about, well, something we might could sell, how much is my house worth? How much is this, but does it really make a difference to you as a district how much your house is worth? You're not going to sell it. You're not going to do any, it's not, it's there for a purpose, and that purpose is not to increase in value and provide some type of a financial resource for you, okay? And so this financial, to me, is a little controversial within the industry, and the GASB's even currently looking at it to see if we really use it or not. But I wanted you to see the difference because I didn't have an opportunity last year to talk to you about it, so that when you are reading the financials, and if you say, this doesn't make sense, I've got assets here and I've got assets over here, but they're not the same, it'll make a little bit more sense to you also when you read the notes to the financial statements, because it explains those two methods. The other thing that I always want to bring board's attention to, and that is on page 12, I want you to look at the lines that has 2540 and 2545 beside it right here. And there's a couple up here that say pension and OPEB. And then there's some right down here that say pension and OPEB. So you see those places where I put those marks? If you look at the numbers out beside those, they're huge. And a few years ago, the GASB said that, and you won't find these numbers on those fund financial statements that we were talking about back here, that's just your general fund and your debt service fund. A few years ago, the GASB said that we had to add the liability for pensions. So that's saying basically that, you have all of your teachers, and they've been teaching, and now they're going to retire, and they have X amount of dollars that they're going to receive in retirement. And if every teacher that has earned the right to retire retired today and TRS shut down, there isn't enough money there to pay every teacher everything that they have earned out for however long they're expected to live. So there's this negative void of money. And the Governmental Accounting Board said, well, all of us have to share based on our proportionate share of that debt. So the TRS gets an actuarial review every year, and it says how much deficit do we have, and then they give all of us a report that says this is how much you have to put on their books. That's the net deficit for that pension. Well, the pension was the first thing we had to put on the books, and we all choked when that happened because it was huge. And you can't pay it down. You can't do anything different. You pay every year exactly what you're told to pay. There is nothing you can do but put it on your books and smile at it. That's it. Okay? But after they got through making us put the pension on the books, then they said we had to put our other post-employment benefits. And that's your retirement health insurance for your teachers. And Dr. Richardson, if you retired today, do you know what your check would be every month, what your retirement check would be?
No,
Could you get close
Yes.
within $1,000 a
Yes.
month or
I
something like
couldn't be
that?
close.
You could get close. But he doesn't know, so that's our pension calculation. Everybody can kind of know, and they know where they're at, and they can see it in the future, how many years I have left, and, when's the point that I start going negative. I had a superintendent one time that he knew when he went negative, when he was working for free, because if he would retire, he actually would make more than what he was getting every day that he came to work. And so, but you don't know if you're going to have your knees replaced, if you're going to have a heart valve problem, if you're going to have a stroke, you don't know what your health situations are going to be. So the OPEB liability for the other post-employment benefits is even bigger than the pension. And now it's on your financials as well. So when you're thinking about all of the numbers that are on this page, I just wanted to make sure that you understand if it says pension or OPEB, that there is not a decision that this board can make or do to do anything about that number. It is definitely pushed down from the top, from the state, from TRS, and it just sits on your financials. And it'll just sit there until the GASB decides that they're going to change the way that we do things. But thank you for letting me give you that pension and OPEB information. And your opinion on your financial statements is unmodified, so that's the best opinion that you can get. We didn't find any compliance problems as far as we looked at your Title I program and your food service program. And so we did not find any compliance issues. During the course of us being here, we made recommendations with regard to some, internal control issues and things that we think maybe could, strengthen the reporting or strengthen controls, but not anything that we felt like was elevated to a finding or was anything that, we needed to worry you guys about. So, and that's the beauty of actually being able to come and be here on site, is that we can take care of some of those things at that time. So if you have any other questions for me, I'll be happy to answer them.
Baker have any? You good?
That just blows my mind
I
about
know.
having to keep that retirement and the pension and everything on.
Now, I'm gonna show you something that'll really blow your mind. It's a number that'll blow your mind. Look on page 49.
And how many years has that been on there?
Let's see, about 2018,
I don't know that,
maybe
I
2000.
realized it.
Yeah, 2018 is probably when the OPEB came on, and the pension was probably 2016, I would say. On page 49, your proportionate share is right up there across the top. You see that number? I mean, I can't even hardly get my glasses to get lined up far.
We're at 49.
On page 49.
Wow.
You see that little old bitty number up there that's got so many numbers to the right of the decimal? Well, that's your proportionate share. So, I mean, you're small in relation to, really large districts. Can you imagine the debt that a really huge district has to put on their books because of their proportionate share for this?
So is that number based on our demographics of our teachers and stuff, or is it?
And it's very interesting how this number gets calculated. But yes, it is. It has to do with your people and but it's really, the whole group they do the evaluation on the entire group of all the teachers in the state of Texas. And then they say, well, what's your proportionate share? Well, are we gonna say that it's your proportionate share based on each individual teacher? No. They're gonna just say, well, it's your proportionate share based upon the whole group. So then, how do they determine what that is? Because everybody's a different age and everybody has different things. And so what they came up with is the way to do that is to say, well, if $50 billion gets paid into the program for the year and you paid in 1 million, then that's your proportionate share. And it's based on last year's contribution of how much the state said, because the legislature sets it and says, this is how much money has got to be paid in. What's your proportionate share? So let's say that you were a district that just hated that liability being on your books. You couldn't stand it. And you said, I want it to go away. I want to pay it up. I don't want to be behind. If we've paid our teachers and this is what our proportionate share is, well, let's just go pay it. Because you got extra money laying around. If you did that, then your proportionate share of the whole would actually go up because now you put more in. So you can't do it and nobody's going to do it. Now, there are some governments that had plans that aren't, you guys have TRS, is what's called a special funding situation where you have so much of the money that's coming from the state that's going directly there to the retirement. But they did allow for, if somebody did just have, millions laying around and they wanted to fund that, and let's say your plan wasn't a TRS plan, you were a government that had your own kind of plan, then you could fund it if you set it in a trust and said you could never touch it, you could never do anything with it, it would only sit there for that. But nobody's going to do that because we all really want to pay as you go. That's kind of the beauty of it, is we're paying in and we got retirees over here collecting money and we're paying in and the cogs on the wheel keep turning, But it's, if you actually counted the pages also in your report that deal with how the disclosure for how the calculation is done for the retirement and for the other post-employment benefit and the assumptions that have to be disclosed. What did we assume? What percentages? What rates of return? What ages? Longevity? All these kinds of things. So it's really just very interesting how they pull that, and try to decide whether I'm going to have the heart attack or you're going to have the heart attack or, what's going to be the numbers. And because of that also, just can you tell I'm not a real OPEB and pension
I can tell.
Yeah.
posting
I
fan?
love it.
I don't think any of us are.
I know it.
What would be really interesting is if you took the last 3 years' audit reports and you looked at them side by side, and you watch that number just go like this, based upon what's going on in the world, what are healthcare costs, how much are we contributing, what worked or didn't work. It's crazy. I mean, honestly, every year when we get ready to, because the state releases the reports, and then we have to go find our districts, you know, and I feel like I'm playing Wheel of Fortune, and I'm spinning the wheel, and I'm trying to see, am I gonna get bankrupt, or am I gonna get a positive number, or, you know, or is it just gonna woo, and dissolve, because that's what it feels like. It is something that you have no more control over, or less control over than if you were rolling the dice or spinning the wheel. There's just nothing you can do with it.
What parameter changed in 2017?
Yeah, that's what I was wondering.
Because you had
From
your
17 to
first years,
18.
2017 through 2014 were relatively the same, and then it doubled from 18 to 20.
Yep, and if you look in the, if you pulled up your reports, and like, let's see, on page, where it starts, is on like page 33. If you looked up, look at page 4, this would be where, if you looked at this, you would find those differences. On page 34, you'll see the actuarial assumptions. And that's where it happened. The actuaries changed their assumptions. Now, we did have, as a result of what happened when the actuaries changed their assumptions and we saw the number jump, then there's like a delay. But remember, we had changes to the retirement and the amount of money that the retirees were contributing for their insurance. Well, that all runs behind in trying to, okay, the actuaries do their report. It's based on, you know, information from a year ago. And then the legislature has to meet, and they only meet every 2 years, and then they have to talk about it, and then we start moving in the direction to try to do some correcting. But I wish that I knew the answer and the solution to it, but I know that it is one of the absolutely most confusing parts of the reporting right now. And when you look at page after page that is in here of the disclosure about the economic changes and changes in actuarial assumptions and look on page 38. I mean, it's a pretty interesting one. How much is that number up there in the top?
Big.
Okay, so that's the OPEB liability. So that's the number that they have come up with that says, okay, that's the OPEB liability, and you can see how much is in the plan. So the deficit is 38 billion.
That's overall.
That's overall. And so we get our little proportionate share of that, and that's how that comes about.
But
But
that's assuming that everybody retired, right?
that's exactly
Okay,
right.
this is still the pay-as-you-go deal. That's why we're only running a net position of 1 billion, 1.9.
That's right, because we're all just doing a pay-as-you-go, but the accounting standards have said, well, you can do the pay-as-you-go, but does that change the fact that if we, accounting is all about, you know, drawing that line in the sand and saying if the world stopped today, if the business stopped today, where would things be? And that's why it's confusing, and I wish they would come up with a different solution to make it more understandable, but there has been talk about where do we go? Do governmental stay short term? This is how we budget. This is what we do. This is our pay as we go. Or do we strike out that financial and go over here and make the governmentals report their financials like a business does? Full accrual, all the liability. You promise this to your employees. You've got to pay them. You got to set the money aside for them. Do we go there? So there's been this argument about even getting rid of the financials that are the way we like them, that show the short term, and just going with the long term. And right now, there is a big debate within the governmentals of really short, some moderate in the middle kind of plan, or everything full accrual. And about 5 or 6 years ago, I was asked to testify before the GASB board on behalf of small governmentals in Texas. And that was an interesting experience because most of the people on that board are from New York. And I was like, no, I don't know that I'm gonna, and a lady from the Texas Society of CPAs had asked me to do this. And I said, I'm not really sure that you want someone with my accent testifying to the GASB board. And they're like, no, that's what we want, because they're gonna remember you when you get up there and tell them how much you dislike what they're trying to get your small governmental organizations to understand, And when they originally came out with this plan, they thought, well, bonding companies are going to use this. The people that are grading you for your bond, they want to know what kind of shape you're really in. And you know what the first thing that all of our bonding agents did? They struck through that OPEB and that pension, because they're like, that doesn't make any difference to you.
There's not anything any school or any entity can do about it. Why are we even debating?
I know. So
There's
it's like,
nothing we can do about it.
there's nothing to do that. So it's like, strike that off, because they're not even using it, because they know that you can't do anything with it. The only number that was in there that when they made us do those financials, that was like, well, maybe that does help you get somewhere, is to say, if we make you look at your financials with your liabilities on here and your buildings, so we know how much do you owe against your buildings and what kind of shape are your buildings in and how depreciated are they. And that's really back 15 years ago when we first started having to do the financials with putting your assets and your liabilities. That was all that we did, was just gave you a financial that said, okay, here's your assets, it's all your assets, these are all your liabilities. But the accounting people started arguing with themselves and going, well, if you put that asset on, then you need to put this asset. Well, if you put that liability on, you need to put this one on. And it's just become a mess. So when you get home and you're, instead of taking your Ambien tonight, you could read the actuarial assumptions inside the report. But if you have questions and you want to call me and ask me about them, I am happy at any point to give you my thoughts on OPEB and pension and your district's financial strengths or weaknesses or any of that. But I just did not want you to, what I hate to see more than anything, but there's just not much I can do about it, is we don't like brackets around numbers, right? Okay. Well, because if you look right down there on that bottom line where it says the unrestricted net position, you see that bracket around that number? If you hadn't have had to pick up the OPEB liability and the pension liability, you wouldn't have a bracket around that number right there. And it just makes it unpleasant. And so I want you to understand what gets it there, so that you don't go, well, wow, Brandon, we used to have a positive number down here, and now we got brackets now,
Blame it on Brandon.
Right, blame it on Brandon, yeah. So anyway, that's my story on OPEB and pension. And thank you for allowing me to do your audit. And thank you for taking the time to meet with me and talk with me about your district. And thank you for putting up with us, because we kind of come through things, but.
Yeah, and it worked out real good because you did give a pretty lengthy list, I will say, but it helped when you were here. Brandon was able to go ahead and get all this compiled, and they did a lot of it prior to, too. I know you would share with me, hey, we're shipping this to her or emailing this and all that. And as you can tell, she's just great to talk to.
Now, is this the first time that they have presented to the board?
Yes,
That's what I thought.
yes.
Yeah.
We had
Because
hired
we missed last year.
Miss last year,
Yeah.
and I believe Brandon did that.
But
or I
no
did
one
that.
has ever gone over that information.
No, you giving us uncomparable.
And this is
Appreciate
kind of how she talks to us too. I mean, it's very, I mean, she doesn't get off in the weeds and all that. And she gave us some great things that we never thought about this person approving something. And then what if there's a family member? That's probably not a great thing. And so it's not like she said, gotcha, I'm writing it down. I mean, she was very open with us. Now, we're going to make those changes and she'll play gotcha next year when she says, hey, we can sit in your office and talk for an hour about things. And that's what I've enjoyed about visiting with her. And she's very open and you can talk. And I know she's got a pretty good drive back. So if y'all want to talk to her on the way home, she probably would love to talk about all the OPEC and all that stuff. So,
I think we've heard all of them here.
yeah.
Yeah.
Thank you, guys.
And we went ahead and signed it. You want that?
I've got to take it by,
Oh,
No.
wait, so this is my rep letter.
oh, gotcha.
Okay, so we're good on that. It's the main approval that you,
I'll get to it.
perfect.
All right.
All right, well, you guys call me if you need me.
We will.
Thank you so much.
Thank you.
Mhm.
Drive safe.
You enjoy your ball games.
If I ever get there.
I was going to ask you questions.
Bye, bye.
Thanks, appreciate you. Be
I'll
careful.
go there.
But number 12 looked a lot better because it's Buccaneers jersey.
Oh,
We need a
It's
motion.
Alabama.
All right. The board will entertain a motion to approve the fiscal year ending August 31st, 2021 financial audits presented.
Mr. President, I also move.
Have a motion by Ms. McElwain.
second.
Second by Ms. Ames. All in favor? All opposed? Motion carried.
There's mine, you up on 50,000.
Yes, sir. And so, we got the, upgrade in baseball, softball, and indoor, projects last year. There were some things that they had not finished throughout the year, and we were kind of holding them accountable. Dr. Richardson sat down with, the architects and Symmetry, the construction company that did the projects, and got us some liquidated damages, a good amount of money back, basically, because they didn't do some things that they said they were gonna do on time. But they did not bill us until this liquidated damages conversation was over, which is in next year. And so we didn't budget for that project. We had budgeted for it last year. They didn't bill us for all of it until this year. And so we didn't budget for it for this year. So I don't feel like we'll need the whole $50,000 because we are gonna get some back because we found that Symmetry overbilled us. I think it's $35,000 they overbilled us, if we call it. So they're gonna give us that back and then, but that $50,000 also may go toward any unforeseen construction costs that may be associated with perhaps doing the LED lights, the playground, or something like, just some buffer there, because you have to approve it ahead of time before you spend it. You don't want to spend it and then go back, oh, you know what, we kind of went over, we need to go back after money, not supposed to do it that way. And so that's what $50,000 for.
Need a motion to approve the budget increase function, function 81, the amount of $50,000 for construction projects as presented.
I make a motion to approve the budget increase.
A motion by Ms. Ames, second.
I second.
Any discussion? All in favor? All opposed? Motion carries. We done? Declare this adjourned.
That's all you gotta do.
All right, we'll meet adjourned.
Where you going? Up there or something?
Thank you very much. I'm gonna get this
I
back meeting.
appreciate it.
Softball,
Brandon,
start up.
thank you for, everything in the audit, because
Yes,
I
thank
know
you.
that was a lot that you had to deal with.
And I tell you, every year, like you said, year 5 is when you start kind of seeing the whole picture.
Yeah,
But just working with her, I can learn more, working with her these last few years, and I have the first school.
that's
It's-
awesome.
You can talk to her, she's not a robot, she explains things.